Hello and welcome once again to the Talk Diaries. And I'm delighted to have with me Georges Ugeux, who I have known for some years, I think it's fair to say. Now, Georges set up 20 years ago Galileo. He's the chairman and CEO there, and that's really an advisory business, largely. I think that's the best way of describing it, Georges. Investment banking advisory business. But he also teaches at Columbia Law University, and he teaches finance and banking there. So he's very well positioned to tell us a little bit about what's going on in the European economy, which is what he commentates on from a political and economic perspective. And he is himself Belgian. I think I'm right in saying that, aren't I, Georges?
Correct.
Excellent. So just if you would start by talking broadly about where the European economy is. The reason I ask is because we had a statement from Mark Rutte, who is the head of NATO, warning that Europe could end up going to war with Russia, which is a terrifying prospect, obviously, for many reasons. We're seeing many grey zone attacks, and we've talked about that on the Talk Diaries. But a war is something different. It's something different from so many perspectives. But one of them is, of course, economic. And the European economy has not been thriving recently. So just tell me, if you would, where you think it is in the economic cycle broadly.
Well, it's something that when I look at it from the United States, where I am, I noticed that the people in the United States did not consider generally that Europe was going well, but very few people know that the European stock markets have performed better than the US stock market. And therefore, Europe is not the miserable market or economy that a lot of people want to portray. So I think that at this stage, the European economy is stronger than it used to be. And it does change nature very much as a result of the war in Ukraine.
So when you say the stock markets have been performing well, you wouldn't say then that that's simply a reflection of what's happening on Wall Street and the fact that the S&P 500, for example, has been roaring ahead?
Well, there is an element of the fact that Wall Street has not been performing as much as it could, but there is also an element which is the strength of the value, and people are starting, and I've been talking about it in some circles, I think people are starting to recognize that you cannot invest just in the US market and consider that it will always go well. And there is a need for rebalancing of portfolio. And I think that's the theme that is going to dominate 2006, which is that are people going...
2026.
Sorry, yeah, 2026. And that people are going to start thinking, what indeed do they want to invest in, and what kind of balance do they want to have between US and European stocks? And I wouldn't be surprised if it wouldn't be favorable to European stocks.
Now, why do you think that is?
There is something to be said about stability. And today, what we have seen is a growth in the stock market in the US, which has been driven by a few stocks and has not been copied by US stocks, US stocks. And therefore, one of the questions that the people have naturally to ask themselves is, can it continue to be as bouncing as it has been in the United States? Are we going to continue to have the kind of growth that we have seen? My view is that it's probably time today, and I'm doing it, to reduce your exposure to the US and increase your exposure to Europe and even to some Asian countries.
Are you saying that because of the political backdrop in the United States, or are you saying it's simply because the market has been pushing ahead on investment broadly and expectations that artificial intelligence will deliver productivity and investment and so on? That's raced ahead, that's run its course, and now we have to look back to the fundamentals. Is that what you're saying?
Yeah, I think what I'm saying is exactly what you said, which is that when you look at the values of some of those stocks, I will give you an example that is almost funny, okay? We all know that Tesla trade at 350 times earnings. okay? And General Motors trades at 9 times, okay? There is something wrong in that valuation model. So we have to look at the fact that there are some stocks that are overvalued in the United States, while there are some stocks that might be undervalued in Europe. And I think this rebalancing makes a lot of sense, both economically and in the sense of the fact that the US has been clearly overbought.
Okay, but when we come to Europe, we're not looking at very strong growth in 2026. Those aren't the forecasts. I mean, it's pretty much flatlining, isn't it? Is the forecast. Is that fair to say? So how can you get a stock market that continues to move ahead if you have an economy which is really not growing very fast?
Well, it's going to be interesting, you see, when you look at the growth of the US market and you see what happened in the US market, you realize that the growth has not been has been driven by other elements than the economic growth. So the question is Europe having a problem of an engine for growth, or does Europe have to compensate for the fact that the rest of the world was not looking favorably? So I am more of the second kind, and I believe that it's pretty obvious to me now that there are European companies who have pretty good fundamentals independently of where the growth of the market is. And, when you look at some healthcare company, when you look at some car companies and so on, Europe does have quite a bit of strength. And I think needs to be considered when you look at an investment.
But the Chancellor of Germany, Friedrich Merz, has said that he thinks that Germany has a structural crisis. And he, I think, I'm right in saying, really referring this to the car industry, the fact that it's not digitalized, maybe, in the way that the Chinese have really picked up on cars being quite a different beast than the internal combustion engine that we're used to. And he feels maybe that Germany's missed the boat a bit here. So are you saying, well, I think that the Europeans will regroup and adjust generally their economies? I mean, when we look at France, it's got budgetary problems, very serious ones. So it would take some sort of readjustment, wouldn't it, to fill that potential?
Well, I'm certainly not pushing much for French stocks, because I consider that the macro situation of France is pretty complicated. But I was surprised by the Chancellor comment, because when you look at electric vehicle and so on, you see that a number of German car companies, starting with Volkswagen, have done quite a few investments there and are ahead of the game. So I think that there are some strengths there. It's not just Tesla. I mean, it's Volkswagen, and it's the Swedish, and there are some points. And it's very difficult for investors not to take into consideration the feeling that, well, things are not that good and so on. I think it's time to be very strict on the analysis that we do about European stocks, and be very aware that the strengths that exist there will continue to stay.
So when you talk about the strengths, so we're putting aside France for the moment, okay? We'll come back to that. But in terms of Germany, where do you see the strength?
Well, I think that there are three main strengths in Germany. One is the metallurgic industry and so on, and equipment and so on. And they are the best in the world in what they are doing. And they export around the world. You then take the car industry itself. You can also talk about the healthcare industry. Okay, so those are serious strengths that they share, by the way, with the Swiss and with the Austrians, and there is a clutter of quality there and quality companies that we seem to have forgotten.
This sounds like what you're saying is we almost need to go back to fundamentals, and that there's been this bubble of excitement, that it's not irrelevant. However, thinking about that has really eclipsed everything else. And I suppose artificial intelligence will infuse into, in the way I suppose that the internet did, and the dot-com bubble, it will infuse into industry, all industries, rather than being an end in itself, which is sort of how we've seen it.
Yeah. And when I talked about artificial intelligence, one of the issues that I see very clearly is that those who are going to benefit from artificial intelligence might be the users, not the producers. And the big companies who are producing are having monstrous valuations at the moment. But it's very difficult to imagine that what the 8 trillion of investments in AI are going to mean in the next few years and when it will be profitable. So I am much less, I'm trying not to be following what I call the buzz and the fashion. And you're right. I mean, it's back to fundamentals. And if a company has been investing $1 trillion in AI, the question has to be, when will they get money out of it?
Yeah.
You just don't do it because you believe it. And I think we are at that stage. And I think the people who are going to be realizing what is going on are going to be much more careful about the kind of investment they will do.
Let's come a bit back, though, to the politics. And you sort of put
Yes.
France aside at the beginning, but it has a budgetary problem. Its debts exceed the size of the economy. Britain's not much better, but it's not quite that bad. How is it going to get out of that problem, and how is it going to try to rein that in?
Well, that's the $100 billion question. Sorry.
I'm sorry,
You
we're
won't
both
get out.
suffering from colds, aren't we? But
Yeah,
it hasn't.
they are not going to go out of it easily. And the good news is that it went through the parliament, so at least we might have to wait until the French presidential election in a couple of years. So it might not be as bad as it is. But the real problem is, what the heck are the French politicians thinking they are doing with their country? I mean, it has been such a disaster, mistake after mistakes. And I don't understand, because at the end of the day, you know where the money is coming from, and you know what you can do and what you can afford. But they don't seem to be interested in this kind of discussion.
Um, But it is symptomatic of the times that we're in, isn't it? Because we are facing all of these political pulls. I mean, for example, in the UK as well, there is a pushback, particularly in the context of the UK budget, of welfare spending, which is a big part of the spend, and that's why it's important. So there are these political divisions which might make progress more difficult. And we know that there's this polarization between the left and right. That's true certainly in the UK. It's true in Germany, and in France. There has always been pushback every time you try to increase the pension age or reduce the size of the state.
Absolutely. And interestingly enough, when you look at the situation, it's basically the same in every country. We are all confronted with this one big problem, which is that we have to be able to afford the pension of the people, and we have to have the means to cover the risks of pension and so on. And we don't have the means to do it right now. So I think we will have to be much more, how would I say it, serious about the management of public finance. Because at the end of the day, today, we have an unacceptable, I would say, situation and an unacceptable way of handling budget deficit.
I'm going to draw you a little bit into talking about the United States because it is important,
Yeah,
I think, politically, to sit across the Atlantic and to look at what is unfolding in the United States and ask yourselves, what conclusions are we drawing about that politically here? And also, what does it mean for the trajectory of the presidency in 2026? Because Trump has tried a number of things out this year. Some he's backed off and some he's pursued. But one wonders what he might do in 2026 and how that might disrupt the health of the global economy further.
Absolutely. And I, for one, hope, but not just hope, that we are going to see a change of regime in the United States and be able to manage the problems of this country. The fact that the people are treated the way they are treated and the measures that have been taken by this government are absolutely terrible for people. So the question is whether we will be sufficiently aware of the mistakes that have been done by this administration to actually refuse to keep anything that would have something to do with the Republicans. It's difficult to say. It's difficult to make that forecast. Personally, I consider that it's quite impossible that we will see the same kind of alignment, political alignment, that we had. And I think that the Republicans will probably lose control, certainly in 2026. And then we will see a bit further down the road. So I think we are going to see things moving pretty quickly. And it's interesting to see that even the Republicans are starting to realize that they don't have a rose garden ahead of them, and they really have to be serious about what the next election is going to be, because there might be big surprises.
Well, yes, although of course there's talk that the midterms may not take place in quite the same way that they have in the past, or at least there's, that there's political manoeuvring, should we say. You get that ahead of every election, but that they may not deliver, should we say, a reflection of what the electorate thinks.
Absolutely. The question is whether the voting system will be able to be manipulated. And that is a major issue. Are we going to have a fair election in 2026 and 2028? And that is the core of the question about democracy.
All of this brings us back to where we started, which is if the peace talks between Ukraine and Russia and the position of the United States becomes, look, we really don't want to fund this. We're fed up with trying to, or that Trump becomes very fed up with trying to broker peace and withdraws funding from Ukraine. That leaves Europe in a very acute position, doesn't it?
Yes, but it's not necessarily bad news.
Because
I think Europe is resilient. And in a situation where the US is actually weakening, it's not necessarily playing badly for Europe.
Do you think that we've talked about the political decoupling that's gone on in this particular context? What about economic decoupling? Do you think that, irrespective of what happens in the midterm elections and the election after that, many countries around the world might feel that they just simply have to decouple from the United States because it's too risky?
I think it's already starting. It is very interesting to see that in a series of countries, new agreements are being signed between India and Canada, between China and the UK. I think we are going into that situation, and this decoupling is good news. And I think that the notion that there is a big world that is going to be dominated by the United States is something of the past. I think we are going to have regional centers, and they will probably have a better balance between themselves, but not necessarily a dominant player like the United States. And I think people are really starting to not just think, but reflect on the decoupling, and they are more and more convinced that they cannot trust the United States.
Are you seeing that reflected, do you think, in the economic numbers right now? I mean, the big question has been this year, I suppose, whether Trump's policies have done significant damage to the United States. You hear anecdotal evidence that factories can't function, that farms can't function because of what he's been doing in regards to immigration. But what about trade and the underlying this adjustment that he's tried to bring about, this more self-reliance and bringing manufacturing back to the United States and so on? Is there any evidence that that transition is happening?
I think there is evidence that it's starting to happen. I wouldn't say that it's happening on a scale. I mean, after all, Trump has only been there since January. So I think the movement is there. The people are starting, when you talk to the political leaders and economic leaders, they are starting to think different. They say, we cannot let it go this way. We need to have a more balanced planet. And, just think about, for instance, the environmental side. It's very interesting to see how there is a pushback on the environment that is against the United States. And I think that's good news.
So, I mean, as with many things that Trump says, there is he manages to tap into a broad disquiet sometimes, and that's I
Yes,
think why people are sympathetic, not synthetic, sympathetic to sometimes some of the things that he says, and that's why he gets to push his agenda. And one of them has been this imbalance of trade. So what you're saying is there is broad sympathy for what he says, which is we should not be importing as much as we do and not balancing that with exports. That finds a broad sympathy amongst many economists, doesn't it?
absolutely. And the analysis that is happening at the moment from the economists is and from the governments is very clearly directing attention to new areas of economic cooperation than the ones that have been the case when we were all believing that the US was our big brother.
So just to finish, I'm going to ask you what you predict for Europe in 2026.
I think
Economic
Europe in 2026 will consolidate. But we need to understand that a lot will depend on what's happening in Ukraine.
Yeah.
But if we can manage to find a solution to the Ukrainian problem, then I think Europe is going to be strengthening in 2026. And
So,
there might be more growth.
and that is fundamental because of the cost of supporting Ukraine and energy prices and
Absolutely.
trade.
Yeah. And I think it's a pretty strong statement that the European Commission has done last week by saying, you know what, in 2027, I think we are no longer going to buy oil from the Russians. This is pretty bold, and I think that's the right thing to do.
Georges Ugeux, thank you very much.
My pleasure, Tanya, as always.